Okay, greetings. Continue from after the reconstruction of account payable and inventory account. That is part of payment to suppliers. In that case, it's only just one part of supplier, which is payment to inventory supplier. So what happened to payment to other type of suppliers? So we have to look at SOCI, alright? We have to look at SOCI and look at other expenses and check whether our SOFP got prepayment or accrual in terms of expense. So let's say you check there's a prepaid expense in SOFP and there is other expenses under expenses. Alright, so what do is you straight away open the prepaid expense account in order to find cash at bank. Now, prepaid expense is an asset, so opening balance on the debit, closing balance on the credit. So always make sure that you write the first line, carry down is always on the second line, opposite sign. Now, you notice I don't put positive, negative sign here. I go according to debit, credit, asset, balance BD, carry down is on the credit. Alright? Okay, so the next thing is to know where to write our cash at bank. So when we pay, cash at bank is on the credit. That's why prepaid expenses will debit. And expense from SOCI has to transfer to profit and loss. That's the reason expense will be here. So debit, profit and loss, credit, prepaid expense. Alright, so understand for this information where you begin. Alright, now how to apply. So let's say this is the information that you get. You have prepaid insurance, opening balance, closing balance. So you put opening balance, closing balance, and then you have insurance expense. So most student issue would be, don't know where to put my cash at bank, don't know where to put my expense. Always remember, if you want to find your cash at bank, ask yourself, when you make payment, credit cash at bank, so you have to debit this account. Alright, so your expense is always opposite sign of your cash at bank. Alright, opposite sign in order for it to be fast. If not, you have to think about where's my profit and loss, this transfer to my profit or loss. Alright, again, the shortcut would be opposite sign of your cash at bank will be your expense. Alright, if your cash at bank is here, opposite sign would be income, as what we have done before. Alright, so this is a shortcut. Alright, let's say you do this, and then what do you get? So you put opening balance over here, closing balance over here, insurance expense put here, then cash at bank, it be balancing figure. Alright. Okay, so what happened if it's an accrued expense account? Again, accrued means haven't paid, so it's a liability, opening balance on the credit, followed by carry down balance on the debit. Then you ask yourself, where's my cash at bank? When I pay expense, credit cash at bank, so cash at bank is here, expense is always opposite sign. Okay, this is a shortcut, remember. If not, you compare it with your profit and loss, is credit, debit. Alright, so I always find the shortcut. Expense is always opposite sign of a cash at bank. If you're doing income account, accrued income account, cash at bank will be this side and then the income will be this side. Alright, this is a shortcut, students. Again, figure out where's your cash at bank, then you know opposite sign is your expense. Alright, okay, so same thing, how to apply this. Let's say this is accrued wages. So you open your accrued wages account, opening balance is on the credit, closing balance is on the debit. Alright, and then when your wage expense. Never write expense first, always write where's your cash at bank. When you make payment, credit cash at bank, so debit this account, accrued expense account, then only opposite sign write your expense, which is 32,000. Alright, so you have done it correctly, you were able to do this. Opening balance, closing balance. Alright, write your cash at bank first, leave it empty, and then write your opposite sign of your cash at bank is your wage expense, write 32,000. Alright, then you know how much you actually pay for your wages, which is 35,000. Alright, when you're going through the list of other expenses to find other suppliers, you'll notice that some items that in SOCI, they are called non-cash items. Why are they called non-cash items? Basically, there's no cash being paid. For example, depreciation of non-current assets. When your non-current asset depreciate, there's no money involved. When there's a doubtful debt, there's no money given to anyone else. As well as there's a gain on asset revaluation or loss, there's no money given to anyone, whether in or out. So it does not affect cash flow. Alright, so to wrap up payment to suppliers and employees under cash flow for operations, we have cash purchases. We have to open account payable as well as inventory to find how much we pay to our credit supplier, as well as other suppliers under other expenses. So after we got that, we total them up, and this is the amount that we get. Okay, same thing. If the business only do purchases in credit terms, then we only need to write this payment to accounts payable. Alright, which is our suppliers for inventory only. Remember, we have to go through other supplier under other expenses like rent, insurance, promotion. Okay, if you find interest pay and dividend pay, same thing. Disclose it separately on its own and not under this big title, not under payment to suppliers and employees. Alright, so once you have done number 1, which is receipt from customers, positive sign, and you have done payment to suppliers and employees, total them up like here. This figure will be transferred here as negative, and the first thing we write is be cash generated from operations. Remember, students always stop here and write cash generated from operations, because in Ways exam they give you 1 mark. So 1 mark from cash generated from operations. Okay, so if we see cash flow from operating activities, there is receipt from customer, which we cover in video 1 and video 2. Payment to suppliers and employees, we cover in video 3 and video 4. So in total, we get cash generated from operations. Okay. The next thing we will write will be income tax paid. Always remember, income tax paid this year will be related to income that we count for last year in SOCI. Or sometimes you find it in income tax payable account. Alright, so whatever we count for this year has not been paid. Alright, it will be income tax payable, not yet paid. So in statement of cash flow, right, the income tax paid is always paying for last year income tax. Alright, make it in negative sign. Things like dividend, interest, whether it's received and paid. Okay, ASB category can be all operating activities, or it can be investing or it can be investing activities. Okay, investing activities would be when you invest in shares, you get dividend. When you put your money in a bank, you get interest. Alright, it can be investing activities. Okay, when it comes to dividend pay, it can be either operating or financing, because when we get money from the shareholders, that is part of source of funds, so it can be financing. Okay, also interest paid can be financing. Now, ASB is pretty loose in this. It can be either O or I. It can be operating or investing. It can be operating or financing. It can be operating or financing for interest paid. Okay. Investing means investment. Financing means source of funds. Alright. So in textbook, right, in the textbook that we're using, they categorize dividend received under O, interest received under O. The only thing that's under financing will be dividend paid. Alright. Okay. How to do in Ways exam, because there's so much of variations. So in Ways exam, always check out the additional information. They will always tell you where they go. Either it goes to operating, investing, or financing. They always have to tell you. So it's under additional information. So for example, if they tell you dividend received and interest received is considered an investing activities. So it will not end up here for cash flow from operating activities. It will go to cash flows from investing activities. Alright? If they tell you. If they do not tell you, then there will be alternative answers. There are answers for included in O and included in I. However, right, based on past records, students always check out the additional information. Most of the time, they will tell you where do they belong to. All right. Otherwise, there'll be quite a number of variation of answers. All right. Okay. So dividend received, interest received, dividend paid, and interest paid. Okay. ASB say if it's a banking institution, financial institution, all will be considered operating. Now, kids, why is that so? It's because as a bank, the normal operation is what? To give out loan and get interest. Alright? Alright? And then when you get something, okay, when you invest your own money to another financial institution, again, you have interest received. Or sometimes the bank itself would actually get a loan and they have to pay their interest. Okay, same thing. Banking can actually, bank can put their money in another company as their day-to-day operations, okay, and they get dividend. Receive or pay would be under their normal day-to-day activities. So only for financial institution, for these four things, is very definite, must be under operating activities. Now, what does operating activities means? Means day to day, that's what they do. They do investment as part of their operating. So in that case, that is their operating activities, cash flows. Alright, so that's all for now for cash flows from operating activities.